This is Smart 24. It's a beautiful Monday, and I believe we're going to be having a very wonderful time right here, all day and all week right here on Smart 24 as we continue to bring you the best of business broadcasting. And it's all about driving business. Well, this is Financial Markets with me, Julius Nsubuga, and we're going to be having a very wonderful time all from 10 up to midday, looking at how the economy is performing and also the financial markets, including the financial industry, the stock market, and the forex, later on with my colleague Marcelino at midday to 1. Well, this is now the beginning of the new week, and of course we have a lot in store this week as we are seeing very big sharp changes in the stock market globally because of a few events that are happening all across the globe. And we're going to be bringing you all that right here in Financial Markets. Well, let's now get started and see how the economy is right now performing in terms of the economic indicators, the GDP, the interest rates, and more. Stay tuned as we now get started with what is happening. Join me over to the screen so we can have a very wonderful time and an overview over what the economy is like right now. So let's now focus right now on how Uganda is currently in terms of its economic performance and a few bits of economic indicators, because it is what tells us how the economy is right now. So let's have a look at a few indicators here and there by the World Bank. And just recall that these figures basically keep changing, but many of them regarding the economy, of course, we get updates quarterly in a week. So we're going to be having these numbers, but remember that they are quarterly figures, including the GDP growth rates and the annual growth rate, the unemployment rate, inflation in the country, interest rates, and so much more. Starting with the currency right now. Well, the currency is basically changing all the time, but it is remaining at 3,522, having previously been at 3,510. So the GDP annual growth rate, well, was previously 4 in the last quarter, but now it basically reduced by 0.9%. The GDP annual growth rate is now at 3.8%, having grown from 12.9% previously. Now the GDP annual growth rate is 3.8%. I think that is quite very sensible because of the recent global pandemic. Well, the unemployment rate is about 2.44, and well, it is very much interesting to know that the unemployment rate, of course, as well, kind of increased from 1.8 previously reported by the World Bank, and now at 2.44. And I think 2.44 is quite well, it is not so much of a very bad figure per se, if you may compare with the past 5 years. But now we have it at 2.44, and I think this is very much evident because the COVID-19 pandemic has been here, and it's been the main event and the main driver of many of these numbers, including the unemployment rate, having increased from 1.8 up to 2.44%. Now, the inflation rate is also another figure that is quite important in the economy, and I believe that so many manufacturers, producers, business people, leaders, entrepreneurs, the inflation rate is one of the figures that probably we have to be well versed with at all times. And thus, it helps us to understand the prices of commodities and how they're performing over a given period of time. And that also may as well impact on our spending and business as well. It has a lot that basically it influences. So the inflation rate is about 2.7% as we speak. And of course, the Bank of Uganda normally updates this, through a monthly update. So we shall see how we are performing as a country in terms of inflation and the rest. So looking at the interest rates over there, it's 6.5. The interest rate is the central bank rate. And the central bank rate is the rate at which the commercial bank basically lends to commercial bank. And it is a very important rate because it determines the rate at which you and I actually access money from the commercial banks. And this figure is a rate of the central bank. It's the base interest rate, as I call it. And it is what is reflected by the central bank all across the globe because it's the base interest rate before it is marked up by commercial banks. Well, it is at 6.5. It's been like that since the last quarter of 2021. The balance of trade, well, this is it basically reduced by about $4 million, but by all means, we are in a negative balance of trade. So when you look at imports and exports, it means we basically imported more than we exported. And that is why you can see here that the balance of trade now stands at $404 million US dollars as we speak right now. 404 million US dollars, having reduced from 408. Of course, it's a slight reduction of about $4 million, but nevertheless, we are importing more than we are exporting. And that also means that if we were a business, we would be basically making losses, not even breaking even. So it is very important to note that the value of the exports have to be higher than the value of the imports. And that is why we always keep an eye on both. And as a country, we must keep an eye on both to ensure that we have a very stable state of business as a country. We're having a look at the current account. The current account still stands at negative 759 million US dollars, and this is also quite something because at the end of the day, we want to have a current account that is basically in positives at least, or probably breaking even, if for the worst. But the current account to GDP is standing at negative 9.8. The current account to GDP the current account as a percentage of GDP stands at negative 9.8% of GDP. So that is where we are standing regarding the current account to GDP. So what I am actually very much interested in is the government debt to GDP, which is 49.8, having increased from 38.2. And this seemed like 2 years ago, like well, we were quite far away from the 50% mark, the 50% threshold, because when we approach 50% and onwards, it means we are operating in danger zone, and anytime soon the country, or probably our debt, could be basically, it could be uncontrollable at some point in time relative to the GDP. So it is important to note that right now as we speak, we have a lot of debt in comparison to the GDP. And that is why we need to up our game as a country in terms of the government debt to GDP. It's currently right now at 49.8, and soon hitting the threshold of 50. It's almost 50 anyway. So looking at the government budget, as a percentage of the GDP, the government budget is way smaller, and it's in negatives, we must say, from negative, is at about negative 6.6% of GDP. And this is quite also something to note. Business confidence is 52.78. It increased from 51.94 points to 52.78 as we speak right now, which I think is quite something commendable at the moment. If our business confidence is above 50 at least, well, we can say it's a fair ground to play, because investors are always very, very keen on this figure. Corporate tax rate is 30%. It's been like this for quite a while. Probably in the last 5 years we haven't seen it change, and probably it won't change unless or otherwise. But it is standing at 30%. That's the corporate tax rate. Well, looking at the personal income tax rate, 40%. That is the personal income tax rate right now as we speak. So these taxes are up for debate, and of course, as a country, we're trying to basically look at these rates over time just to see if they really make sense both to government and the general population. So it is something that we always have to keep an eye on as a country and also government. Well, going down further, we have more economic indicators. Just recall that Financial Markets comes to you every Monday to Friday, 10 to midday. And you can also follow us on our social media handles, that is Twitter, Smart24TV, and Facebook, Smart24TV, and also Instagram, Smart24TV. And you can as well follow me on Twitter as well, Kazwe Julius Nsubuga, and also on Facebook on Nsubuga Julius, and also on Twitter Nsubuga Julius. Then we can also be able to basically have your feedback and probably see where we can be of help as Smart24 and as the financial markets as we move ahead regarding what is happening in the world of finance, in the world of business, economics, and the rest of the information that probably could be very important for you and could help you make the best of business decisions. Well, going down further, my producer will help me do that. Well, we are still looking at a few, those were basically, that was an overview of what is happening in Uganda. But going into detail, let's have a look at what is also happening in terms of trade. In terms of trade, how are we trading, and what is exactly the picture in trade as a country? Well, as a country, we have to look at a few things like imports and exports, terms of trade, tourist arrivals, and the balance of trade, which we have just seen. So we were just having an overview before, but right now, going into detail, of course, as we saw, the balance of trade is in negatives. It's basically $404 million US. That's the value of our balance of trade, which probably could be something we work on as a country through various measures, possibly through export promotion measures and import substitution measures that can help try to lift and boost that figure to a more better figure than it is right now. So having a look at the exports, as you see in the last quarter we had over $326 million US worth of exports, and if you compare with imports in terms of value, we have about $730 million US, and that the difference is probably a huge one. And I think we may want to basically do much more better than this, because it is very intriguing to see how much the worth of value of imports that we're getting from other countries, including China and others. It's not bad to import anyway, but it is always healthy as well to have a balance, and it is important to note that we must actually be in position to improve that figure. Well, having a look at the tourist arrivals as well, you can see over there that previously we had about 1.5 million tourists coming into our country, Uganda, but probably because of the COVID-19 pandemic, it went down to 473,000, as you can see right over there. So we're having a look at more in trade, down, having a look at more in trade. Shakira, help me do that, my producer. Would you help me do that? So it is very important to note that, well, as a country, we are kind of like, yes, there are so many other, many indicators that are basically giving us a very good clue of where the country is going, most especially when the economy is now open fully. And we hope that probably this year will be a beginning year, or probably a reboot year a year where we shall see a lot of these figures basically coming back to normal, and also where we shall see business and the entire economy recovering. And of course, as Bank of Uganda notes that in the next 2 years is when we expect to have pre-COVID level, pre-COVID pandemic levels of growth. That is when probably beyond 2024 is when we could have, or probably begin to see levels of growth that were there before the COVID-19 pandemic hit. So the terrorism index, as you can see over here, is a very good one, because investors and business people also want to know what is the terrorism index in Uganda. It's basically at 3.28%, having reduced from 3.96%. Well, let's have more down. Let's have more down there. So you can see that we have had a look at more of what is basically Uganda's standpoint in terms of GDP indicators. And we have seen that the GDP growth rate, well, it reduced from 4% up to negative 0.9. So that is a huge reduction, but we anticipate further growth of the economy as we basically are open, and well, as many sectors of the economy are now operating normally. So looking at the GDP, Uganda's GDP is standing at $37.37 US billion, currently having increased from 35.17 billion US dollars. So it is at 37.37 right now as we speak. And also looking at the GDP per capita, this is quite something that I also look out for when I am trying to gauge the standpoint of an economy at any given one point in time. So the GDP per capita right now stands at $894, that is dollars, $894, the GDP per capita. And it is a very, very important figure, most especially when you're an investor. You want to have a look at the GDP per capita. What is the amount of goods and services being produced by a given country per individual, probably per individual? That would be about 894 US dollars currently as we speak, having slightly reduced from 898 US dollars. Well, this could be basically because of the previous economic standpoint in terms of COVID-19. And of course, many of the reductions right now can be driven around keeping other factors constant around the COVID-19 pandemic. I also want to have a look at the different contributors to the economy as well, the different contributors, the sectors, and how they're contributing to the entire GDP. Well, agriculture, as we go up, agriculture is basically, right now as we speak, 10.5 trillion Ugandan shillings. That's the contribution of agriculture to the entire GDP. And the GDP from construction also stands at 2.2 trillion, 2.257 trillion shillings. So you can see that agriculture by far is a very important sector, because when you want to look at probably where to prioritize more, or probably add more effort and probably achieve your goals, you have to look at which sector is contributing more and which sector is contributing less, and how significant are these sectors. If one sector that is very significant to the economy is basically producing less, then you may think of measures to boost it. Looking at the GDP from manufacturing, we have about 4.5 trillion Ugandan shillings. That's the contribution of manufacturing to the entire GDP as we speak right now. So having a look also at the GDP from mining, it's about 331 billion billion shillings. And we may see this figure soon basically rising, because it's been, well, it reduced by about 60, but now we are beginning to see an upward movement because of oil and gas that will also come in, and probably we can see the value of mining going up from 331 billion shillings to even more. So we may see that actually increasing further. And well, the GDP from public administration is about 1.1 trillion Ugandan shillings, and that is the figure coming from public administration. GDP from services, well, services is basically the biggest contributor because, of course, you have a lot of things in there in the services sector, but it is contributing a lot by about more than 5 trillion Ugandan shillings, more than 5 trillion shillings from agriculture. So you can see basically that services are basically contributing the more according to other sectoral contributions to GDP. And well, going down further, there are actually more figures down there. Shakira, you will help me do that. So having a more, now here, okay, so that is it with the sectoral contributions to GDP. So the sectoral contributions to GDP are very much important to also keep in mind, because probably if you're looking at investing, you'd want to know where is the biggest comparative advantage for Uganda, and probably what sector is contributing more to the GDP, and how can you play, what is it about, what are the nitty-gritty about a sector, and how basically can you be a player, and how can you make profit and make money from that sector if it is either performing, if it's contributing very much more or probably less. But keeping other factors constant, of course, it is always important to note that a bigger figure most times indicates that that country, if you get into that sector and probably in spite of the competition, you can basically make it. Well, inflation is, these figures basically also are an indicator of inflation, as you can see on the screen right here. We saw that inflation is standing at 2.7% as we speak right now, having reduced from 2.9 previously. And no wonder we have our interest rate at 6.5%, which is its lowest in the last probably 10 years. We haven't seen Uganda's CBR going down to 6.5. Uganda's interest rate going down to 6.5. So we can see that also, well, as the economy is coming up, and probably as we have more money in circulation, the interest rate, of course, can't stay the same, and at some point in time, the Bank of Uganda will have to pull out money out of the economy at some point later on in the future. But right now, as we are in reboot mode as an economy, of course, it makes sense to have more money in circulation so as to avail capital to entrepreneurs, to businesses, companies, so as to have factors of production active and be utilized properly. And thus, at the end of the day, having economic growth and also development. And so inflation rate stands at 2.7%, and no wonder there is basically not much of a threat at the moment, keeping other factors constant. There is not much of a threat, but later on, as we saw, well, we can see these figures kind of changing. Well, food inflation as well, because all of us basically buy food, and it is something that we may have to also put emphasis on. Food inflation is at 5.3%, and it's been like this even in the last quarter of 2021. Up to date, food inflation is at 5.3%, because food, by all means, is something that probably you and I have to consume every single day. And knowing how it is basically faring is a very important, a very important way to basically understand and know that, okay, well, if our food inflation is so high, then probably the prices are basically also a bit high, and thus making disposable income even more limited. Well, having a look at the core inflation rate, which I'm very much concerned about. Core inflation is basically the change in inflation over a given period of time, but less. You basically have you don't include the food and energy inflation. So the core inflation includes everything else except energy and also food. So it is basically at 2.3%, having reduced from 2.9 up to 2.3% as we speak right now. And well, going down furthermore, my producer will help me do that. Well, we can see that the export prices are at about 201 points, having increased from 197. Well, let's have a look at the inflation rate month on month. Inflation rate month on month basically also a bit of went down from 0.5 up to about negative 0.3. That's probably, we can say, a negative 0.8% change. And I think that is quite something to note as well. Well, so we have that also, a very important figure, month on month. It is always critical to know the monthly inflation rate and how it's performing. But most times the quarterly inflation gives us probably a much more mature figure that can basically give the real picture of what is happening in the economy. And going down, my producer will help me do that. Well, we have lots and lots more, probably with labor. Labor is a very important part of the economy as well, because labor, at the end of the day, you want to know what unemployment rate is. What is the population? And so the unemployment rate as we speak right now is 2.44, as we saw in the beginning in our overview. And the population as we speak right now, as per World Bank, is 45.74 Ugandans. And that is the number that we are basically having in terms of population. That is where we stand. So it is basically even predicted that by 2050, this figure can have risen up to about 100 million people. Do you think that is possible or not? But well, what is really impossible these days? Everything probably is moving at a fast rate, and we can see this figure increasing faster than ever before. If you look at Uganda's population in the past 10 years and how it has been increasing from 36, probably we've had about 10 more million people in the last decade. 10 million people and more that have been added to Uganda's population. So which I think by 2050 we can probably tend towards 100 million if we have a faster rate of population growth rate. And probably it's about 3% as we speak, 3.3% as we speak right now. So with that probably we can have a clue of what the economy of Uganda is like, and of course with that we can be able to gauge and probably see, anticipate and probably predict where the economy is going. And also we have more of course coming up in global stocks with me. And basically stay tuned. I'm going to be right back after this short commercial break.